Asha, please, first off, introduce your boss there. I see some
Yeah.
who definitely
Hi
tells you
guys,
what when to do it.
happy, happy New Year to each and every one of you guys and P Life Firm. Thank you so much for allowing us to come on board with you to do this presentation tonight. Thank you guys so much. Hi Sarah.
Hi. We just wanted to give some tips on how to buy a house and how to pick the right real estate agent.
Oh, good.
Very good.
I like where this is going, Asha.
So,
And I also wanted to tell you guys about how my mom has a nonprofit, as you guys heard. It's called Random Active
act of random kindness.
Active Random Kindness. And she likes to help a lot of people. I've been seeing that for the past few years. So for a few years, we've been trying to help a lot of people in need with clothes, food, and anything they really need.
Thank you, Sarah, for that. So, guys, one of
That's
the
wonderful.
thanks, thank you.
Indeed.
One of the most important things I feel as a real estate agent is making sure that the buyer has a in-depth relationship with his or her sales representative. Now, with that being said, she or either person, they need to have a strong bond with your realtor. And in that, what I mean by saying is, it's okay to ask questions. How many properties you've sold in the area? Are you familiar with the area? How long have you been in real estate? So these are very important because from contract to closing, it's on about 60 to 90 days. And you guys are in a marriage for that period of time. So that relationship that's building has to be a strong one from the get-go.
And also, I'd like to add on. So, say you're with a client and you're showing this house you wanted to present to her, right? And she doesn't like it, and you try to pick different houses for her, but he or she doesn't like it. You're wasting your time doing that. You have to know the person, and you have to sit in the car with the person, talk to the person, ask about what they need, what they want, what are they looking for, because you don't want to waste your time, or else you'll be staying with them for years on end.
Oh, cool beans.
Yeah, she is learning, right? She's learning.
Yeah, she's a good
learning.
student, Asha, a very good student.
Thank you so much. Thank you. So she brings a very strong point in terms of location, guys who's listening. You have to have a mindset as to where you want to live. Do you want to live in Brooklyn? Do you want to go out to Queens? You can't do both. You have to zone in into your location. And you must also have a timeline in your mindset. Okay, I need to get a house within the first 4 to 6 months. So that in itself goes back to the initial process of the relationship. That it's 100% imperative that buyers have a relationship with their agent, and that's why I'm here. Sarah?
I also wanted to add on again. So as I was saying before, you have to have a good relationship. If you don't, you're going to be staying with them for years and weeks. Then it'll go nowhere. You have, like she was saying, you have to know if you want to live in Brooklyn, Queens, Long Island, or anywhere. You can't be like 1 minute, oh, I want to live in Brooklyn, and then the next minute, I want to live in Long Island. You have to pick one place. If you have kids and you want to be near a good school zone, you have to say, oh, I want to live near Mark Twain, or I want to live near PS233, I want to live near a place where my kid can walk over there. So you have to have a imagination or something in mind of where you want to live.
Okay. Yes, guys. So that's my quick introduction.
Can I ask one question? How old are you?
Oh, that's a question I had as well.
How old are you? Because I would hire you in a second.
I'm 10 years old.
Okay.
Terrific.
Thank you, guys.
Thank you.
Thank you.
Thank you.
So would you like us, Albert, to begin?
Albert?
Yes. Do you have the ability to show your screen?
Okay,
Yes,
so
I
now
do.
let's see where we are.
Oh, and I want to also welcome and say hello to Whitney. Whitney Cobble's on the line also.
Okay.
Okay.
Am I showing a full screen there, guys?
Yes,
Yeah.
Charlie.
Yes.
you
All
are.
right, terrific. I picked the right share. Okay, and once again, thank you for having us. I mean, it's education is huge. I mean, we can never get enough education, and the opportunity to get in front of such nice people and talk about something that is so dear to our hearts. As mentioned before, you got a little bit of a bio on us, and that was a phenomenal introduction. Thank you. The first that we've had like that. We might have to hire you on our next presentation. But my partner, Bridget, and I have been in the business well over 20 years each. And we've been working together, and I've known Bridget for probably 15, 16 years now. So she's kind of like my work wife, and I'm her work husband. Although right now we're working remotely, but we're actually doing phenomenal. You know, we're doing big numbers. People are buying houses, and we've all been able to adapt to the current situation. So let me bring us right into it. Bridge, I'm going to go into the beginning, and then I'll bring you right into
Okay,
the
we can do it
presentation.
that way. No problem.
Couple of fun facts. If you don't know Freedom Mortgage is a top 10 lender in the country. All right, with the #1 VA lender in the United States. Our bank's licensed in 50 states right now. We also are the top 10, the top FHA lender, and we are in New York State, and we're also the top Sony Mae lender in New York State. We've got 1.3 million in clients in our portfolio, and obviously we value our relationships, and we're committed to our clients and referral partners. I mean, that's our most important, that we're able to service our customers, educate our customers, and make good loans. A little bit more about us. Freedom Mortgage has different products, and this is something in our training to come that we'll be able to get more into. The Sony Mae program, which is the state of New York mortgage agency. Conventional financing, we offer Fannie and Freddie loans. FHA, which is called the 203B. We also offer the rehabilitation loans with FHA, which is the 203K. And we, as mentioned before, we do VA loans as well. Something about Freedom Mortgage is that we're a mortgage bank. We're not a broker. We don't do passbook and savings. All we do and all we specialize in is mortgages. Okay. Now, the current environment, you know, we all are aware of what's going on. You know, the impact of COVID has, in some respect, created a significant opportunity for buyers and sellers. It's pushed a lot of people out of their comfort zone to make decisions that they knew they had to make, and said, I'm going to do it now. You know, that we're putting it off. And what we've seen is a lot of changes in people's decisions, where before they were going to wait 2 or 3 years, 4 years. Now they've said, you know what, I got to get out of this apartment. It's time. I'm going to move out to the suburbs, or I'm going to upsize. You know, you've heard in the past downsizing. You're seeing people upsize because, you know, the interest rates are lower. So next slide right here. The federal government has taken an aggressive role in stabilizing the mortgage market and reducing the interest rates. We all hear about that every day, about our interest rates. Favorable lending programs are still available to borrowers. The housing prices have not declined. Okay, there's a lot of misconceptions out there that the housing prices have declined. They haven't. They've actually gone up, and I'm sure Asha would be able to go more into that later, as that she's seeing that people are actually overbidding on houses today. And the inventory continues to remain low, basically meaning that the houses that go on the market, they go very quick. You know, they're not staying there for a long period of time. In some areas, and we've seen this on Long Island because Bridget and I live on Long Island, we've seen that the actual time frame from some of the properties are on there for what, Bridge, about 60 days, and then they're in contract.
I mean, they're quick. They're going above asking. Asha could attest to that. You know, we've heard, you know, the environment is very favorable. And because of what's happened with COVID, lots of people are moving from the boroughs to Long Island, or, you know, Noreen alluded to it, and so did Charlie. What we're finding is people need more room. There's been a change. There's a dynamic change that's going on, right? People are working from home. And I think that, and I think companies think this as well, people are going to start working more at home, not less. And so they need more room. They need more space. So, you know, all of these things, the current environment is gotten really, really aggressive in terms of purchasing. You know, and it's the programs, as Charlie said earlier in the slide, the programs are out there. The lending is out there. I mean, you heard Janet, if you guys have heard, Janet Yellen spoke the other day. They intend to keep, she's now the new Treasury Secretary. If she gets approved, they intend to keep interest rates low. And I think they'll be there for a while. They'll be low for a while. So these are all great things. And as Charlie said, you know, well, before I go there, what's happened in this environment, the same way we're having this Zoom call, this is where the industry is headed. And what happened early on with COVID, because of the restrictions placed on people, what they're doing is all of the banks and all of the attorneys have adjusted so that everything now is being done electronically. It is not being done, sorry, that's what happens when you work at home, right? Everything is being done electronically, and nothing, so there is a way to do your purchase now. And maybe Asha can speak to that as well in terms of viewing homes. But that's basically what's going on in the industry.
And I think also what's happened is, as we see right here, advances in technology and automated the entire home buying process, enabling it to all to remain safe. You see more of the industry changing as Bridget. I mean, who would ever have thought, if we go back a year, guys, that we would all be on Zoom, 20 people talking about buying a home. Think about the gas that's saved, the time, as we can see, you could be home with your child. There's going to be a lot of lifestyle changes that this virus has essentially enabled, as horrible as it is as to what's happened and the lives lost, but it's also enabled people to see that there's other ways of doing business, and the way we've had to conform to what's happened in this past year, I think has opened up more of the floodgates of people going and being more online because they weren't able to go out and do it the old school way. So the technology advances that have come have been huge. And I think that that's what's also helped push our industry to that next level.
Right. And that's happened with everything. What it's done is push forward people working from home. And what that's done is
sure they've seen
change.
that.
Pardon?
I'm sure the gentleman with the insurance has seen that as well, that
Yeah.
the amount of business that has increased for him as well, being
Yeah.
able to talk to people. Whereas in the past it was, oh, yeah, I'd rather come in and see you face to face. Well, yeah, we could do that now.
Right.
You know?
We can still be face to face, right?
Right.
Absolutely.
I'm going to jump into the next one. Bridge, do you want to
Well, okay.
go into the with the interest rates?
All right. I'll talk a little bit about this. So, as we said, there are huge changes in the industry. There are changes in the way people are conducting business, resulting, just to sum it up, changes in their housing needs. It's as simple as that. Okay. So, Sarah brought up a very good point for a 10-year-old. And what she said was, and what Asha was discussing was, if you have a goal without any direction, you're not going to get anywhere. Your goal might be to buy a house, but unless you put some parameters on it, and unless you define what you want, you're just going to go around in a circle. So we're going to talk a little bit about what's gone on in terms of interest rates, the impact of interest rates, and how they impact your financing ability and your purchasing power. So if you just look quickly, right, we took 3 scenarios here. And while a 5.5% interest rate sounds really high, because we just used 3 numbers to make it easy. In actuality, about, I'd say 6 to 8 weeks ago, Charlie, can you go back to that first slide? In actuality, about 6 to 8 weeks ago, 30-year fixed rates were below 3, right? We were doing people at 2.625. I have a client who's still locked in at 2.625. We're going to close him shortly. But if you just look at this without getting too involved in the numbers, we don't want to put anybody to sleep. What it shows is, what's obvious to everyone is, as interest rates increase, your monthly mortgage amount increases, right? At 3.5, your payment's $3,400. At 4.5, it's, I think someone's in the chat. We can get that after, but okay, I got covered. At 3.5%, your monthly mortgage is $3,400. At 4.5, it's $3,700, and at 5.5, it's $4,000, right? So we all know that intuitively, right? The interest rate goes up, your monthly expense goes up. But what people don't realize is, unless there's a commensurate increase in your income, your purchasing power is actually going to decline. So in the, and again, the chat box is covering this, but so I need to, for the chat box to, okay, let me just take it down, okay. What it shows is a person in, and we made this very simple, guys, okay. We used a standard 3.5% down. We used FHA just because that seems to be open for a lot of people. So we just made it very simple. We oversimplified it a little bit, but you can still see that when interest rates are 3.5%, a person making $89,000 can actually borrow under this scenario, $490,000. And what we did was we used standard lending ratios, all right, and standard debt ratios. When interest rates go up under that scenario, that borrower, in order to be able to qualify for that mortgage, would need to make $96,000. And if interest rates went up further, that borrower, in order to be able to apply for that mortgage, would need to make $105,000. So, as I said, when I started this, it's really important. Everybody knows your mortgage payment will go up, but they don't realize the eroding in the financing ability that you have when interest rates go up. And it wasn't that long ago, it was before COVID, where rates had a 4 handle in front of them. Okay, Charlie, you want to do the next slide? What I did was, just to make it easier, I took it a step further, right? I said, okay, if you're making $89,000 a year and you can get that mortgage when interest rates are 3.5%. If your income doesn't go up enough to cover up the increase in the interest rate cost, what can you borrow? And so you can see that while at a 3.5% interest rate, you can borrow 490,000. At 4.5, you can only borrow 441, and at 5.5, you can only borrow 392.
So what is that telling you basically by
So-
just looking at those numbers? If you're going to wait and the market changes and the interest rates go up, if your income doesn't go up, you're not going to be able to buy as an expensive house. So people are starting to see that, and that's what's causing this hysteria that I got to buy a house now, because if interest rates go up, I'm not going to be able to qualify to get that house. This might be my shot now. So we're encouraging anybody that is contemplating, get pre-approved. Give us a call. We'll set up a Zoom call like this. We'll go over the numbers, and at least you've answered inside here whether you can qualify. Can you get pre-approved? And then once you are pre-approved, then you're going to be speaking with Asha, and then Asha will be taking you out to see homes.
Right. So there's a confluence of factors that is actually happening that's resulting in the demand in the market, right? People need more room. They want to get out of, some want to stay in the boroughs, some want to get out of the boroughs and come to Long Island. And, you know, renting expenses are so high. So this is something that I give my clients, just this little statistic, and it's not meant to make them feel badly. It's meant to, and I always preface that, it's meant to show them the impact of their actions. So people today are spending $2,000, $2,500 a month. If you are a family and you have a couple of kids and you need a large apartment and you're spending that kind of money, $2,500 a month, think about it. Over a 12-month period, that's $30,000. After 5 years, that's $150,000. And what Noreen said earlier is absolutely true. One of the easiest ways to build wealth is through the purchase of a home. And Charlie knows I give this example to my clients all the time. At least if you buy something now, right? Or if you just, whenever you buy, but you purchase a home instead of just renting all the time, if you pay, and I use this example, $400,000 for a bunch of bricks, you know, a small house on Long Island, you really can't get for 400 anymore, but well, the number doesn't matter. What matters is the point. You pay $400 for a bunch of bricks, even if the value of the home doesn't increase over the next 30 years, which is not the way economics works. At least 30 years from now, you have something to sell. You have a bunch of bricks to sell for 400. Whereas if you continue to rent for your lifetime, you're not going to have that. So it's a great way to transfer wealth. And then we're just going to go quickly and to build wealth and to transfer it to your family. Let's just go quickly into what a bank looks at, okay? Again, this is a very general, very broad view. And banks look at three things when they look at in terms of your lending ability. They look at your credit, they look at your income, and they look at your assets. And we've just listed a few things just to kind of get people familiar with it. So Charlie, if you go to the next slide, and I believe
sometimes also
knows about this.
Sometimes also people say to us, well, I don't want my credit pulled. You know, is it a hard pull? Is it a soft pull? Why do you need to look at my credit? Well, credit tells the whole picture. And sometimes it's hard for somebody to understand that, well, why do you got to pull a hard pull? Well, you're buying a home. We're going to be on the line for hundreds of thousands of dollars. We want to use an accurate credit report. We don't want to use Credit Karma, you know, or one of these online agencies. We actually pull a report that also shows us, is there any judgments? Is there any liens? Is there any foreclosures? There's more to it than just, you know, two or three credit scores or a couple of trade lines. So we have to pull a tri-merged credit report.
And just so you know, what your credit, the reason why it's so integral to the lending process is just in a very simple sentence, what your credit report shows is the amount of debt you have and how well you've paid it. And that's what banks are worried about. Are you going to pay? What does your past history look like? And are you going to be able, or have you showed fiscal restraint in the way you've used your credit? And are you going to do that when you purchase a home? So your
And part of that, Bridget,
is really important.
By pulling the credit report in the pre-approval process, you know, some people don't buy a home for 8 months later or 6 months later. They have to find the right home. They have prior commitments, their lease is ending. By pulling a tri-merge report right up front and doing the pre-approval, it gives us an opportunity to see if there's any ways in which we can get some bumps that might put you into the next tier, that might also provide you with a lower interest rate, or put you into a program with less money down, or maybe enables you from not being able to qualify to now being able to qualify because we've been able to fix things on your credit. So that's why it's very important when you go through the pre-approval, whether you're dealing with Bridget and I, or you're dealing with another bank, you want to make sure that everything's on the up and up and that they're able to see exactly what's reporting.
So let me just give you an example, and Charlie covered it, but let me just explain a little bit. When you use it, the reason why your credit is so important and why the pre-approval process is so important is, you know, you might be a first-time home buyer and there are programs out there, but that doesn't negate you from having to qualify for them, right? Just because you're a home, for example, let's use Sony May. Just because you're a first-time home buyer, if your credit history is severely compromised, Sony May isn't going to give you a mortgage. You know, so that's why the pre-approval process is important, because as Sarah said, or as I summed up, a goal without having any direction will just, you won't reach anything. And so the pre-approval process will unmask issues with your credit. Maybe it will require, we can tell you, look, you're eligible for this and that, but not until you pay off some debt, because there are debt to income ratio requirements, okay? In terms of the income, just to get an idea for anybody who's out there who has any questions, anything that you receive in terms of, you know, that's, what word am I looking for? That's going to reoccurring is considered income. So your base salary, your overtime, if you get a money, if you're, if you
that's reported as well. That's reported.
That's reported. Right. Cash, you know, anything, if you have a cash business and you're not reporting it, you know,
Sorry.
The federal government, when you get a mortgage, we look at your tax return. So if you're not reporting it, you're not going to be able to borrow. So just to get an idea, we have some examples: Social Security income, disability income. If you're a veteran receiving disability income, that can be included. Child support, right. Spousal maintenance, but they have to go out for 3 years, right? We have to know that you're going to continue to receive it. I have a guy today, he's retired, and so he has some retirement income. He worked for the city of New York, and now he also started a new career. That retirement income is considered money. People who have, people who are in the trades, who are, you know, and are receiving annuity payments. Charlie and I we're doing a guy right now. The guy collects disability. He was a tradesman. I think he was an electrician. And he collects money, disability money from an annuity. And so that's considered income. Okay. So all those things, dividend interest income, they're all considered income. You want to go to the next slide, Charlie? Asset. So what is asset? Your assets are anything that have value. So it's your savings account, your checking account. Many people today have 401k plans. That's considered an asset, even if you're not using it. We include it on our mortgage applications because it strengthens your application, right? You might only have $30,000 in cash or $25,000 in cash, but your financial responsibility is reflected in the fact that you have $100,000 in a retirement account. We use it, we put it on the mortgage application. It strengthens our position. Life insurance policies that have a cash value, whole life policies, those are considered assets. Brokerage funds and gifted funds, right? So
it gives comfort level to an underwriter that's signing her license on there when she's underwriting that file, and they see that they have a cash value and a whole life policy of $45,000. That has value. And if you're young, and I was young years ago. I'm 50 now, although I probably don't look it. But when I was 21 years old, I opened up a whole life policy with MetLife. It was like $100 a month, and now there could be $30,000-$40,000 in that. That's an asset. That's something that we would look at and say, okay, this is another reason why this is a good candidate. So, buying a home, you're hearing things now. You might not be ready right now, but in the whole gamut of down the road, and if it's a young person that's listening to this right now, these are things hopefully you can take some of the information that we're giving you, and also from the finance end of it is you might want to start structuring your finances for down the road so that you can bring yourself wealth.
Right.
And whole life insurance is a form of wealth.
Right. We didn't want to, we mentioned earlier the entire range of mortgage products that we offer. We didn't want to talk about specific ones right now. We just wanted to give you an overview. We can talk, regarding specific ones if Noreen would like us to do that at another point in time. We're happy to do that. But for now, we just wanted to give people an overview. So what about the steps in the home buying process, right? Again, you have to have a goal, but you can't reach your goal without having some direction. So get yourself an agent, a good agent, someone, as Asha said, who will listen to you, who will listen to your needs, your wants, who will give you the knowledge you need to be able to make the decision. So for example, she has access to data and she can tell you, while we all know prices have gone up, but she'll be able to tell you, look, you might not want to offer a full price on this house or over asking, but the house down the street sold for X, the house around the corner sold for Y. This is the range that you're in. So she can give you that guidance and of course, give you information regarding, amenities that are in the area, right? Like she said, do you want to walk to school? These are the houses of worship in the area. This is how far you are from the train, from the Long Island Railroad, from the New York City subway. Okay, did you want to say something, Charlie?
I wanted to just jump into about agent because I think with my 23 years, I can tell you I've seen a lot of agents. And I would like to say I've worked on many transactions with Asha. She is phenomenal. There is no clock.
She is?
She just keeps running. She has a work ethic that far exceeds anybody that I've seen. And I've seen a lot of realtors. And
we can attest to that because we get the calls at night and on the weekend. Right?
the care that she has for her customers. And the reason I'm bringing Asha up is because it's so important that agent sets the tone of the whole transaction. That agent also puts together the team so that your hand is held through the whole process. A lot of times you'll hear, "Oh, I'm going to use my brother's sister-in-law who's a real estate agent." Now, that's great. They might do one transaction a year. They might work part-time. Right. Asha, she lives and breathes this. Her daughter lives and breathes this. It's a part. It's a culture. And I think what's most important is on the human side of it. I've seen Asha walk away from deals too because it wasn't the right deal for that person. And to me, you want to have somebody that you work with that cherishes the opportunity, because you might do this once or twice in your life. So it's very important, whether it's buying real estate, whether it's creating wealth, that you work with the right team of professionals that are looking out for you and put you first. And it's, a great opportunity that you've met Asha here tonight as well. And I'd like to vouch for her because I've always.
All right, Charlie, let's just wrap things up. Okay, so I think we need to I think there are going to be a few more people that are going to be speaking, but this is kind of just an outline of what the process is. You find a letter. The pre-approval is important because it's going to unearth issues if you have any. And then you'll make your offer, and Asha would give you information regarding an inspector and an attorney, okay? And if you just go to the last slide, Charlie, so we could wrap this up. Okay, so where does this leave us? Well, what we said earlier, interest rates are low. That enhances your borrowing ability. And for sellers, anybody, and Asha will tell you, anybody who's interested in selling, people are getting over asking. So with that, I think we'll close up. I know anybody who has any questions, if you'd like to put them in the chat, that's great. Or I don't know how you guys have it planned if you wait until the end.
Beautiful. Thank you, Bridget. Thank you, Charlie. I mean, this was an abundance of information. And, it spoke to the emphasis of what the firm is trying to put together, is that we want to build your financial team, right? So we want to bring in the pieces. We're the tax consultant. We have the realtor. We know the mortgage person. So we have the pieces to give you the ability to, depending on your scenario and your situation, we meet you where you are, and then we build around it, to accomplish the overall goal. So these are the building blocks of financial empowerment, financial leverage, and wealth building. So again, thank you for that information. I'm sure there's a lot of people with some questions that they don't know what to really ask at the moment, but we want to make sure that we tie in Asha, Bridget, and you, Charlie, to make sure that for those people who are not sure of the questions of what to ask, once we look at their overall situation, to enlighten them a little bit more, then they'll be more knowledgeable of the questions to ask. Because I know for, especially now during the beginning of tax season, we have a lot of self-employed people. And those self-employed people, again, like you alluded to, they want to do as much cash business as possible. But on paper, that cash business doesn't help them when they want to achieve a new goal. So now is the time, especially, to have that tax conversation. Tax planning is normally done before tax season, because of the prep time, but it's an all year round conversation, from our standpoint. So again, thank you. We look to have more of these conversations, probably a more in-depth conversation later on where we can pinpoint some specific scenarios and, look at those scenarios based on realistic individuals or client portfolios. So again, thank you. We want to now just tie in quickly Timothy. And this is going to be a perfect segue because, again, it alluded to the asset value of different, let's just say, financial products, you know, financial tools. And Timothy will be able to give us the additional information of what his company and the services he provides to enhance this wealth building discussion.
All right, thank you for having me, guys. I want to give you a little information about me. Like Mr. Peters alluded to when he introduced me, I was previously in the credit restoration business. I enjoyed it because I did get to help people, but I didn't get to help people on a level that I wanted to. So when a friend of mine introduced me to this opportunity, I figured I'd take a look at it. And like Mr. Peters, it was a 30-minute presentation. And it really moved me. It showed me that I could help people in ways doing that business that I could not help with the credit restoration business. Okay, so that's why I got started. Now, the nature of our business is we offer life insurance and investment products, home security systems, auto and home insurance. We have quite a few products that we offer. I've been doing this since July of last year. And the pandemic has changed the way that they do their business. Normally they would sit down at a kitchen table with the family and, you know, they would discuss the options that we have available for them. We do a financial needs analysis to see how we could help them and what areas they need to save some money, earn some extra money for retirement and things of that nature. But because of the pandemic, we can't do that. But it did open up some opportunities for us because now we can get licensed in other states. So I live in Texas, but the pandemic has allowed me to be licensed in New York, South Carolina, North Carolina, Massachusetts, Ohio, Virginia. So with the use of Zoom, we can be anywhere in the US and still serve that clientele. The non-resident license has increased business in our office by, I want to say, probably about 400%. So we try to find as many people around the country that wants to do what we do. Now, is it possible for me to share my screen?
Sure.
All right. Give me 1 second here. Let me get, all right. Bear with me a second. My internet connection is kind of slow here at home, so my computer doesn't move that fast.
So while Timothy's setting up, you know, again, we want to just make sure that we give everyone an opportunity to think of what they may or may not need in this financial capacity. So just keep that in mind. Please send in those questions, and we'll gladly be able to take the time to answer them.
Thank you. Now, the name of the company is Primerica. I'm not sure if any of you guys have heard of it, but we're the largest independent financial services marketing organization in North America. We're listed on the New York Stock Exchange, and we've been in business since 1977. We have approximately 5 million lives insured and approximately 2 million investment accounts with our company. Now, these are all of the services that we offer. Life insurance, auto and home. We do home security systems. We no longer do long-term care, but we do legal protection with our paid legal services, and we offer identity theft protection. In the investment spectrum, we have 401ks, annuities, managed investments, mutual funds. And the good thing about this business is the company actually pays for your license to sell these services. I'm currently licensed to sell life insurance and everything on the left of this diagram. I'm working on my securities license as well right now. And once I take that exam, the company will also be paying for that license. And as an entrepreneur working from home, you know, startup costs has a lot to do with, you know, people being able to function. You know, with the pandemic, a lot of people lost some income. And the good thing about this business is the startup cost was so low. In order for me to get started at the time, it costed me $99, a one-time fee. They covered all of the state application exam fees and all of the processing fees for my license. And then I just pay $25 a month. That gives me access to all of our training material and the websites that we use to put in, insurance applications, the investments, and so forth.
Tim, sorry to bother. Sorry to interrupt. We
Yes,
want to please help us try to keep the conversations towards the real estate and mortgage applications of your services and business, if you don't mind. And I know we're crunch for time, so just kind of help us into keeping it concise with the home buying scenario.
most definitely. Like I mentioned earlier, some of the services that we offer include the auto and home insurance. Now, a lot of homeowners, they purchase a home and they're looking to save money, looking to protect their assets. So, we can provide them a home security system for that. And also with the life insurance, I have a gentleman that I just helped. He had an insurance policy that covered his home as well. And the interest rate that he was paying in the monthly premium was outstanding. So I was able to help him with a life insurance policy that also covered the purchase of his home in the event that, he passed away. His wife's house would be paid for and she would maintain some income for the next 10 to 15 years. So that is definitely something that we can help homeowners. Now, as far as the home buying process, in approximately June, we'll also be moving into that market where we'll be able to refinance mortgages and things of that nature. I don't have a lot of information on that as of yet, but I do know that we will be in that field as of June of this year. So there's a bunch of different ways we can help a first-time home buyer. Maybe not with the immediate as like a real estate agent, but once they have their home and they need to protect it, that's definitely something that we can do.
All right, thank you. So I know we have a few questions, Chester, if you don't mind, let's just go off a few quickly that popped up in the chat. Oh, sorry, I wasn't sharing my screen.
What were you saying?
Let me just scroll back because I know we had some questions that popped up.
Yes.
So, okay, what is considered a first-time home buyer? Quick, if you don't mind, Bridget, just briefly, because someone had put in that question.
That's a great question.
Yeah.
That's
anyone who hasn't owned a home in 3 years. As long as you haven't owned a home in 3 years, you're defined. Even if you had a home and you sold it, as long as you have not owned a home in 3 years, you're considered a first-time home
in the
buyer.
past 3 years.
So now I know I ran into a situation with a couple where the husband and wife had purchased a house as a first-time home buyer. Years later, I don't remember how many years later, but then there was a divorce, and the husband, well, both of them actually had the opportunity to become first-time home buyers a second time.
That's correct.
Okay.
So what happened is, for example, the state of New York in their program, if you're a first time, if you get divorced and, a year and a half later, you want to buy a house, they'll allow you to use their product to purchase a home.
So something also to mention, and we see this a lot, and we have a deal right now going on. I just wanted to parlay off of it, was mom, dad, and then they had the daughter also on the deal. So there's 3 borrowers, and the daughter, the father brought up and said, well, my daughter is engaged, and I know she's going to be wanting to buy a home in another year. It might be under that 3 years. Well, how did we get around that? And essentially, if she's not on the deed, right, Bridget?
Right.
Then
the deed, you have to remember, a deed confers home ownership, right? So if you're not on the deed, you're not considered an owner of the property. Now, there are steps we have to go through when you've co-signed, with your parents, but it doesn't preclude you from getting a mortgage on your own.
a child could help their parents and also help themselves in a couple of years. It's not like they're using up.
What we do, just quickly, is we exclude that debt has to be paid. We have to verify that the child is not paying that debt. They co-sign, but they're not paying it. As long as they're not paying the debt through looking at 1 year of mortgage payments, then we're okay.
So one of the rule of thumbs I try to give our clients is that
So-
whoever shows up on the interest payments that's reported to the IRS,
Right.
there needs to be a 3-year gap within those reporting years.
Right, because what happens is, just so you know, the state of New York, the way they verify you're not a homeowner is they look at your tax return.
Correct. And this comes
Right, and then we run title. You have to remember, when title is run, that's when we uncover a lot of stuff as well. So I had a client, and I'll just tell you quickly so people understand, who told me he never owned a home. He was a first-time home buyer. Well, we did a mortgage application as a first-time home buyer, right?
Yeah.
Lo and behold, in the process, because we investigate, we find out everything, okay? So in the process, we find out that the client actually owned a home prior, and within like the last year, and it was an investment property. And he said to me, his reasoning was, it wasn't my primary residence. And I'm like, you own that place. It might not have been your primary. And so that he still got financing, but that knocked him out of the box for
that program.
Got you. Now for you, Asha and but Sarah, you know, I it's again, Sarah, I don't feel bad for you keeping your employees up so late. So yes, Asha, the median credit score for someone to qualify, if you could just expand on that a little bit more. I know it's a mortgage component, but it relates to the debt to income ratio and someone's financial resources. So it's going to tie into the importance of budgeting, you know, knowing what income comes in, how the expenses go out, and then managing the credit score. So if you don't mind, please just give us some more information on what people can think about, where they can start to know that their credit score is healthy enough to consider this purchase.
One thing to jump in on that, a lot of times.
He asked Asha.
Oh, I'm sorry. My bad. Sorry, Asha. Sorry.
I was gonna bring you in eventually, but the best credit score to start off with would be on or about 650, correct, guys? Bridget,
Well, the old story is it depends, right?
Right.
If you have a 650 credit score and you're doing an FHA, that's fine. Sony Mae doesn't hit you for a credit, right? For a lower credit score. But if you're trying to do conventional financing, your credit score, your interest rate is a function of your credit score and your loan to value. So think about it like our insurance man said, the riskier you are, the higher the rate you're going to pay. So 650 isn't optimal for a conventional loan, but you can get an FHA.
Right.
The great thing about Sony Mae is they don't give you, Sony Mae allows you to do 3% down and you don't get a hit for your credit score. You don't get a hit to the interest rate for your credit score.
But
So
I mean,
credit score is important.
But it depends.
Right.
And
it's more important in certain circumstances than others, but generically, the better your credit score, the easier it is to get your mortgage application approved.
But for mortgage, for a conventional mortgage, if I were to come to you for conventional mortgage, if 650 is not optimal, what's the optimal score for a conventional mortgage?
Well, at least a 700. If you have a 760, you're going to get optimal pricing, meaning the best interest rate. At 700, you're still, if you put down 3% as a first-time home buyer or 5% even, at 700, you're not going to get the best rate out there.
But
it's still,
if you put, let's say you had a 680 credit score and you put 35% down, okay, you might be at the same interest rate as somebody has a 740 that's putting 5 or 10% down. So there's a lot of
interest rates, work like a grid. Okay, the more money you put down, all other things being equal, the better the interest rate. Your higher the credit score, the better the interest rate. It just works as a grid.
So we want to, emphasize on meeting our clients, our friends and families where they are, right? And working
Right.
from there. And to realize, no matter what the number is, where you are, there's a goal in mind that you want to achieve.
Right.
So we want to just make sure that we get on the train to know that we're going to have a couple of stops to go. We know where to obtain. So again, for the people listening, I don't want anyone coming away like, you know what, I know I don't have that score right now, but again, you don't buy a house or you don't make any decision like this for the next day. So it's
Right.
a planning process. And that's why we're here to build this team for you to support you in that initiative.
Right.
Albert?
And I just like to clarify one thing. If you want to buy today and you have great income, and let's say, your credit score is a 650 or a 660, that doesn't mean you're not going to get financing. Okay. If you only have 3 or 3.5% to put down and your debt to income ratios don't fit a Sony May, well, you could get FHA financing. And today an FHA rate at 3.5% down with a 650 is a really competitive rate, maybe 3%. It's not like they can't do it.
That's what I was going to jump in and say, Albert, is look at where interest rates are right now and what we're discussing here. Let's say a primo rate is 2.625, okay, for somebody with 740, 760 credit. Somebody at 640, 650 is getting 3 1/8. They're still buying a home. There's still a program out there that we could put together to help you with. So Albert is 100% correct in saying, don't put a number on this. Don't get discouraged on this. There's a lady, here's a personal story. Judy Wright. Judy Wright, I've been telling this story probably 22 years because it was the first year I was in the business. Up in Corning, New York, small loan I did, $65,000. Okay. It's a $65,000 loan. She bought her first home. She was 67 years old. She was at the same job, making the same money for over 25 years. And at the end, she was so excited, so appreciative. I didn't feel like I did that much. I mean, it was a simple loan. And afterwards, I said to her, I go, Judy, I've never seen somebody so excited about it. She's inviting me to barbecues. I felt like I was part of her family. And she goes, everybody told me that there was no way I can get a mortgage. And I listened to them, Charlie. I listened to them for 20 years. And the moral of the story is, don't listen to everybody else. Listen to the team. Listen to your advisor. Come and speak to us because there might be something. You might be better off taking the 3 1/8% instead of waiting for 8 months to get your credit up to get to the 740, because by that time the rate might be, 4 1/8%. So what did you really accomplish? So that's why I'm saying. Go ahead, Brett.
I want to just say one thing. When I first got into this business, again, it was like, well, maybe you should wait, and maybe you should do this and that. You have to be ready. Yes, absolutely. But you know what, Albert? I realized after I worked with average people, not average people, your average person. Yeah, I'll say an average, right? A lot of people, when I see today, people spending $2,500 a month in rent, that same number I gave you, $30,000 a year. And if it's not 30, if it's 20,000, after 5 years, 6 years, all they're doing is paying their landlord's mortgage. That's all that's happening. You guys are financial professionals. You know the benefit of the mortgage interest expense. You know the benefit of the real estate tax deduction. I would rather see them, if they get an FHA with a 640 or a 650, I'd rather see them do that than continue on in a path that gives them, truthfully, no financial stability 10 years down the road. So what I do is when a person, and I'll just give you a quick example. When a person comes in and wants a conventional loan, right? I'd like to try with conventional, not FHA, for a variety of reasons. We can go into it another presentation. Person comes in with a conventional loan. As a first-time home buyer, you can do 3% down. The first thing I ask them is, can we do 5? Just 2 more percent. Can we do that? Because the mortgage interest you're going to pay on a monthly basis on a conventional loan, the difference between a 3 and a 5% down is a lot of money.
Right.
So that's where we try and refine things. But I kind of look at it today, after whatever, since 2003, doing this 18 years, I look at the whole person. We talk about paying off debt, maybe looking at their 401k plan. They don't realize they're paying 20% on credit cards, right? But they don't realize they could take a small loan, 10, 15,000 against their 401k plan, pay the interest back to themselves, and relieve themselves of a huge credit card burden. So we try and look at, as I'm sure you guys do as well, the entirety.
For sure. I mean, it's all about the individual situation.
Right.
Right.
Absolutely.
So again, I think this is going to lead to another more fruitful conversation at a later time, but we do
Yeah.
want to be mindful of everyone's time and night.
Yes.
So we're going to close out now. As a reminder, tax season will begin next month.
Albert, before you close out,
Sure.
just one quick, there's something you raised about I think about somebody being a first-time homeowner. They mentioned a scenario where someone was helping their parents,
Mm-hmm.
so they were not under the deed of the mortgage, but they were not on the deed of the for the property,
right.
but they were
Right.
co-signed the mortgage.
Right.
Right.
So that would qualify them to become a first-time home buyer, correct?
Right. They haven't, they're not on the
But-
title.
Okay, but they're not on the deed, but they're still on the hook
Yes.
Well,
for that first mortgage.
Well, here's the thing though. Remember, I said, and I don't want to take a lot of time. I realize that we spoke maybe too much, but we can talk about it. So mom, dad, and child get a mortgage, right? Now the child is engaged. She wants to get her own mortgage.
Mhm.
How do we not include that liability on her, him or her? The way we do it is we show that mom and dad have really been paying the mortgage for a year.
Right.
Okay, you're required to show 12 months. We show 12 months of canceled checks or 12 months of bank statements with automatic payments going out, showing, and the payment's got to be Mr. or Mrs. Smith, not the daughter's name. The account has to be Mr. or Mrs. Smith. What does that prove? That proves
The
yeah, they
parents were paying
sign.
the mortgage.
Right, the kids sign, but the parents are paying the mortgage, the real estate taxes, and the homeowner's insurance all in.
Mm-hmm.
Okay.
All right.
Hopefully that
So
answers
again,
your question.
this is such an
Okay.
important conversation, and it's such an intriguing. I'm sure we're gonna have to have a longer duration of a webinar. And again, for those questions that may pop up later, please call into the office. If you have tax questions, let the office know,
Right.
and let us answer them for you. What taxes?
And Albert, I just want to say one thing. I tell all my clients, this time of the year, if you're looking at buying, talk to your accountant, because your accountant will tell you what the tax benefit is for you to buy a home, and how maybe the mortgage payment's $3,200, but on an after-tax basis, you're only going to be paying $25.
There you go.
So tell your
that was coming out of my
client base that.
right, exactly.
Yeah.
No, because we want to show the tax benefits
Right.
of ownership, ownership in small business and entrepreneurship. So there's tons of tax benefits that we need to enlighten folks about their opportunities. So this all ties in again to the overall bigger picture of financial education and financial literacy. So this is just wonderful. I mean, I look forward to the upcoming conversation that we can have. We'll be able to tie in a real estate attorney to discuss some legal tips on home ownership. And again, I want to say thanks to our newest person who joined the marketing team, Whitney Cobble. She is a talented entrepreneur and owns Wits Rights Agency, and she'll be assisting Latoya on upcoming months with the financial literacy events. So please, everyone, stay tuned. Please look out for the emails for the upcoming topics, and stay in touch, because this is only going to grow to support and encourage our families, our friends, and our community to be better off as we engage each other. So please remember, let us be the financial team that you rely on to be able to help you move things along. So please, Latoya, if you don't mind just hopping on and helping us close out tonight's program.
Latoya? Okay.
We might
have lost her.
Yeah.
Yeah, maybe we lost her.
Okay. First, I'd like to just thank each and every one of you for attending. This is our first financial literacy event in 2021. Again, this is the year of our clients, and we want to celebrate our clients. We're starting with Asha, one of our clients, and we wanted to give her an opportunity to share her business expertise as well as her team. There's so much food for thought this evening, and I am thrilled to hear the presentation from Freedom Mortgage. We have spoken, and I do think that in 2021, there's lots of other opportunities for us to create other virtual events where we can focus on some of the items that we touched on here this evening. At this time, I want to thank you. We try our best to stick to 1 hour, but this evening we did encroach on your evening time with your family. My apologies for that. At this time, I just want to let you know that as we move forward next month, as Albert mentioned, just want to let you know that we will be focusing a little bit more on real estate industry entrepreneurs. We want to give everyone an opportunity. This is the platform, again, is our community engagement initiative. Bridget, Charlie, Asha, thank you so much for the wealth of information that you shared. Tim,
Thank you for having us.
Oh no, you're absolutely welcome. This is our first opportunity. We're engaging you, but it will not be our last. Tim had to leave us, and it's important for entrepreneurs to share their stories. These stories of how they're starting their businesses is not only serving to inspire others, but also to empower others to do the same. So with that being said, I just want to thank you. You can certainly reach out to us. We are on Facebook. You can reach us via our website. Our office information is online. There are lots of resources. We know a lot of individuals are starting businesses and have started businesses in the midst of COVID. So thank you all. I look forward to having you join us next month. Our events are the third Thursday of every month, and have a wonderful evening. Our slogan this year, because of COVID, is stay positive, test negative, please wash your hands, and make sure you wear your mask. Thank you and have a good evening.
Thank you,
Thanks
Noreen.
again.
Thank you.